Hi, welcome to a past question a day. My name is Shadakopoku Frempong, and today we'll be solving some questions on standards. So, IAS 23, borrowing cost set out the condition under which borrowing cost should be capitalized or expensed. On 1st August 2023, Fosti PLC commenced construction of a factory building for its own use. On the same date, it issued a 5% loan note for 40 million. The entire proceeds of the loan note were immediately used to pay for the land and to purchase building material for the project. Construction works commenced on 1st October 2023 and continued throughout the year except for a half-month break in December and also a further half-month break in July 2024. Required, state the condition under which borrowing cost can be capitalized. I calculate the amount that should be capitalized as borrowing cost for the financial year end, July 2024. So let's pick the first requirement, the conditions under which borrowing cost should be capitalized. One, borrowing cost is being incurred. Cost is being incurred. What it means is that we should have gone for the loan and there should be interest on that loan that is active. So yeah, borrowing cost is being incurred. Two, expenditure on the qualifying asset should be incurred. It's also being incurred, meaning we are spending on the asset that we are constructing. Then three, activities is ongoing to construct the qualifying asset. We may be spending on the asset, but it doesn't necessarily mean activities may be ongoing. If it has to do with the construction of an office building, we may be able to incur some expense, buy the cement and all those stuff, but construction activities may not be ongoing. So it is very important we note the difference. Activities is ongoing to construct the assets. So yeah, these are the conditions under which we capitalize borrowing costs. We should have gone for the loan and there should have been costs we are incurring for obtaining the debt finance. We should have also started incurring expenses on the qualifying asset and also activities to construct or complete the qualifying asset should be ongoing. That is the only condition these are the conditions we need to meet before we can go ahead and capitalize any borrowing costs. So I calculate the amount that should be capitalized as borrowing costs for the financial year ended July 2024. Now, we were told that construction activities commenced on 1st October. So October, November, December. December, we were told it's half month. So we are going to divide this into two. January, February, March, April, May, June, July. July 2 is half. So we have one half year, another half year, making a full month. All right, so we are left with 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months. All right, so we are going to do 5%, which is per annum for the 12 months, times 40 million times 9 over 12, because activities was not throughout the 12 months. So 5% times 40 million times 9 over 12. And this is going to give us 1.5 million. And that is our answer. Now let's look at the other question. IAS 12 income tax prescribes the accounting treatment of income tax, including how to account for current and future tax consequence of assets, liabilities, and transactions recognized in the financial statement. IAS 12 requires entity reporting under IFRS to disclose certain items. Required. Identify 3 disclosure requirements of IAS 12. So anytime the standard or you are being asked to identify or state the disclosure requirements of a subject matter of a standard, basically write anything you know about the standard, right? So the tax rate, tax expense, in fact, any tax credit that you have, tax credits. You can talk about deferred tax. So yeah, basically anything about the subject matter is better than just leaving it blank because probably you didn't read. So thank you for watching and we'll meet another time. Bye.